How do you view the credit bureau business at this point in time when retail banking has taken off in a big way?
Yeah, so Raghu, first of all, we being the fastest growing large economy right now, all of us know it's heavily fueled by our young population and we are a consumption led economy. And to bring that to relevance to your question, in terms of how credit bureau business plays a role on retail banking, we're talking about a consumption led economy, young population. Let's go to the next point on retail banking or retail lending. So, Raghu, in a large country like ours, right? Today, let's say a Raghu applies for a loan from a Kadalur to a Bank of Baroda. Both of them, of course, don't know each other, right? There are two things that come to play in that. So, if the two entities that I spoke about, a Raghu the individual and Bank of Baroda as an example, or at a generic level, anybody, if I were to ask you for a loan, two things you need. First of all, you need to know my identity very clearly. Is Raghu the same Raghu that he claims to be? It starts with that. Then the second is what we call probability of default, which in common language we can say trust. Raghu has to know, first of all, that the person asking, or the bank has to know that Raghu who's asking for loan is the same Raghu that he claims to be, A, and B, we trust him to part with the money and it will come back with interest, what we call probability of default. Now you look at both this ID and PD, or identity and the trust factor, both of it, when people are sitting miles away in the marketplace, the trust is created by critical information on both counts. That information is what credit bureaus provide today. And if you look at our mission statement for CIBIL, the purpose statement is information for good. And we define our business as we exist to create this trust in the marketplace. Now, how has this played out in terms of real numbers over the last 10 years? Because ultimately, this is the intent, this is the theory behind it. Let's look at the numbers to see if it plays out. Okay. So, over the last 10 years, Raghu, our retail portfolio at an industry level has grown 6x at a CAGR of 20%. Okay. Then live consumers has grown at over the 10 years, it's grown 4.5x at a CAGR of 16. Number of women borrowers, right? It's grown 6x at a CAGR of 21%. Number of young borrowers between 18 and 30, 6x at 20% CAGR. Number of consumers with more than two products, 7x in the last 10 years. Then if I were to look at some other interesting statistics, right? First time borrowers, what we call new to credit in the industry, right? There are 17 crore new to credit customers or borrowers in the last 5 years. And then we talk about deep geo. We are India. We talk about inclusive growth all the time. And when we talk about inclusive growth, all these segments that I'm talking about, be it deep geography, young borrowers, etc. Not everybody has fantastic 3 years IT returns and all a thick file based on which the lender sitting somewhere away can take a decision. So it's this information in the digital ecosystem which creates the right trust artifacts that actually creates this growth. So to sum up all of these points, I think if you talk about retail banking on one side and credit bureau business on the other, my summation would be that the two are entwined, intertwined, and highly synergistic. Both are critical to each other's growth. I link it back to where I started. Therefore, retail banking to grow, this is critical. And we know that retail banking has a direct correlation and a causative role to play in the growth of the economy. I hope that answers your question.
I take a related question at this point in time. Despite all the data mining opportunities the lenders have, how is that the cross-sell ratio in this country is still where it is and it's not moving up? Because it's a much better way of getting that incremental customer rather than blowing up capital.
Oh, absolutely. So cross-sell ratio, Raghu, if you see some of the, so if you look at cross-sell ratios, you would see a nice range between some private sector banks or some of the new age fintechs versus some of the old age lenders in whatever definition we call them, right? And I think the single differentiating factor would be how much data they use, how can they use different sources of data to put together, use new information to sell more and more across the life cycle of a customer. So again, A, it comes down to usage of data and analytics, and B, to some extent also, Raghu, I I think we are at some kind of an inflection point, because I was in the banking side for the previous 20 years of my life. So I have seen this growing significantly. I think we are at some kind of an inflection point. If you look at cross-sell, Raghu, everybody needs one or two credit cards in their pocket in today's world. Though UPI has come in and taken away the need to have a plastic in your pocket. Apart from that, all of us start our career, we need a two-wheeler loan, then we take a home loan, etc. Nowadays, you will see that this cross-sell ratio or number of loans per customer is also going up on the buy now, pay later and some of these fintech-led products, which are again consumption-led, which goes with our economy, our socio-economic nature of our country. It goes with it. So I think it's a matter of time. I'm sure you're going to see a lot of growth in the cross-sell as time goes by in the next 2-3 years.
Can you give a sense of the cross-sell ratio at the industry level? A specific number?
Yeah. So typically at a bureau level, okay, if I were to look at the number of trades per customer, we use the word trades for the number of accounts. It could be a credit card or a loan account. Today, bureau level average is 3.5. It used to be 2.1 just about, I think, 3 to 5 years back. It was like 2. Today, it's already 3.5. Though a lot of this growth has happened also thanks to the consumption loans, personal loans, consumer durable loans, two-wheeler loans. But that goes with our socio-economic nature of our country. So I think there's a good improvement. 2 to 3.5 within 3 to 5 years is actually a good improvement. And last but not the least, Raghu, you also have to always keep in mind from a very banking perspective, as we cross-sell more and more, you also want to worry about concentration risk and leverage ratios. So I think it's a fine balance, actually.
How far are we away from bespoke pricing for customers rather than a one-fits-all kind of pricing?
That's a good question. I think a lot of the progressive lenders are moving towards, it may not be bespoke as you put it, but definitely, let's say, risk-based pricing. So if you see a lot of newspaper ads these days, the paper ads themselves say based on credit scores. So 2-3 things are happening. There are much better approval rates for the people with better credit scores. Then there are much faster approvals for people with better credit scores. Third, loan amounts. People with better credit scores with same income level get higher loan amounts. Fourth, people get lower interest rates also with better credit scores. So there is a good progress. I think the sooner the lenders get onto that, better their own competitive advantage at industry level. There is good progress, but yeah, I know there is some good distance to travel on this.
And what is your sense of the delinquency levels in the retail book?
Delinquency levels, Raghu, actually, if you see, even I've been a risk manager in a bank all my life. Now I'm sitting at CIBIL. I used to worry with the pandemic and all the lockdowns, right? Lockdowns, then we had moratoriums, rescheduling. One was always worried, kya hoga? But I think India as a country and the regulators, policymakers, overall fantastic job. So today, actually, Raghu, if you look at our retail portfolios, the delinquencies are well within acceptable ranges, well within normal thresholds. To give an example, auto loan delinquency, 90 DPD, I'm saying, which is the NPA ratios, is below 1%. Personal loan is at 1.01%. Credit cards is at 2.56%. These are like very, very nicely acceptable and affordable delinquency rates from a P&L perspective as well. In fact, some of these products in the last few quarters, Raghu, actually delinquencies have even reduced. And I think there are 2-3 factors again. A, there is good credit awareness amongst population today. People know that it's important to pay on time so that their credit history is intact. The second thing is, obviously, in a growing economy, loan books are also, in a robustly growing economy, even loan books are healthy. The only thing I would say at this stage on delinquency specifically, Raghu, since we work closely with banks, is that whenever we have good growth in the loan book size or in the advances, overall growth in the economy, just single word of caution is that bad loans are also made in good times, right? So to that extent, I think it'll be important for, right now things are superb, very, very nicely stable, but it'll be important for lenders to keep a close watch, look for early warning signals, monitor specifically for particular clusters which get overly. We've seen all this in the past. When there's a growth in good markets, some one or two players will end up over leveraging particular segments of customers or particular geographies. So it will be important to keep a good close watch on young vintages, concentration and risk and leverage ratios. But otherwise, I think we are very well positioned right now.
And lastly, what is your initial view on the proposed National Financial Information Registry? How do you think this will impact the credit markets?
Yeah, I think, Raghu, first of all, little early to talk too much in detail about it, since we are all awaiting further details, except for the announcement by the finance minister a few days back. But overall, if you see in any market where inclusive growth is important, and then any market which is as digitally active as we are as a country with so many digital ecosystems, etc., lot of different data sets are created by different sources, right? So to that extent, there is information asymmetry, etc., in a market. When we talk about the National Information Finance Information Registry, a lot will depend on the following few points to say what will be the construct of this registry, right? Who all will be the sources who provide this data at what frequency, right? And then what will be the ID systems, because each of these will have different ID systems, and we as a country do have multiple ID systems. So how will we converge those ID systems? And obviously very important will be who all get access to this data, because ultimately with such a registry, it's really about access so that we can all create value. And lastly, enabling regulation, because this data will come from very different sources. So the enabling regulation. So we will wait and watch this development closely. And last but not the least, at TransUnion CIBIL, we are very eagerly looking forward to working with the policymakers and the regulators to see, and the industry to see how we can contribute, understand it better, we can contribute and contribute to our India's growth story.
Rajesh Kumar, it was wonderful talking to you, and we hope to engage with you soon in the near future. Thank you.
Look forward to that. Thank you, Luke.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.